Welcome back, everybody.
Yeah, the pressure is mounting for the Federal Reserve to lower interest rates, and there are signs that it could happen this month.
Yeah, local financial professional Matt Eilers from Medalist Wealth Management here to share what these cuts could mean for the state of the economy and, of course, for you at home, your family. We all know that that is super important, especially when it comes to financial things here. So let's talk about interest rates. Why now? Why are we seeing the potential cuts here? I mean, this could actually end up being a good thing, right?
It could be. Now, there's two sides of the opinion here for what's going to happen when the rates cut. And if you've been paying attention to any of the headlines on any of the different stations, people have been kind of wondering, when is this finally going to happen? Because it's being talked about so much. So, supporters of a rate cut, like the Trump administration, they really believe that cutting rates, the Federal Reserve cutting interest rates, is going to stimulate the economy. And there's another side of, the coin where they say, well, we're at a delicate point right now with inflation, and a rate cut could actually maybe work against us a little bit. But there are pros and cons to rate cuts when you look at all the different things out there. But I think the biggest thing is we're at some pretty high interest rates right now. And people have seen that this has been going on for a very, very long time. The cost of borrowing remains very high. Mortgage, loans, car loans, all those different things, it's high, and there's a time that it has to go down. And finally, people are saying, okay, this may be it, and the Fed is alluding to the probability of it happening here in September.
Okay, so this is something that we might see happen, we might not see this happen. So just keep that in the back of your mind as we continue through this interview. Again, you mentioned the cost of borrowing. We know the housing market is severely impacted by interest rates wherever they land at. So what are the potential impacts specifically on the housing market?
So this is a really interesting one because the housing market doesn't always react the way that you think it may to the interest rate cuts. In fact, last year when the Fed cut rates, mortgage rates went up. And I think that surprised a lot of individuals. But what we should see is it should stimulate the economy to where people should be going out and purchasing more homes. So that's really the idea, is that a rate cut is going to allow people to put their dollars to work back into the economy, stimulate growth. If that means being able to get into a home, it remains to be seen what's going to happen with those rates, because what we've seen this year already is mortgage rates have started to dip a little as they've been pre-pricing in these expected drops.
Interesting.
So some are saying, hey, the mortgage rates are already where they're going to be, but it does remain to be seen.
Interesting. Yeah. Again, all time will tell when we get into this, when the Fed finally makes that decision.
Yeah. So all the different factors that go into determining what we think is going to happen with the housing market. When we're talking about, is it going to be a buyer's market or a seller's market? Are there any of those factors that are kind of pointing towards one or the other at this point, or is it just wait and see?
I think it's a little bit wait and see, but I think the writing is on the wall to where people know, like, the housing market is slowed. And there's not a lot of transactions going on, and they do need to stimulate the economy. So the Fed sees this, but it's just such a delicate balancing act with making sure that inflation doesn't spike as a result. Because a drop in interest rates could stimulate the stock market. However, we don't have a crystal ball, and we don't know for sure what that is going to do. Trying to time the market is very, very tricky. We could see a spike one day. We could also see, if inflation jumps up, we could see the markets go south. So it really remains to be seen. But I think the biggest thing that the markets want, that consumers want, is they want some clarity. They want to know, what are we going to be facing, and what does this mean for the economy going forward?
Yeah, I know you deal with a lot of clients. What are they saying when it comes to the future of the financial market here? I mean, do you have people that are a little bit apprehensive to kind of invest in anything? And if so, why should they or why should they not be?
That's a good question. I believe that a lot of people just want to know, what does this mean to me and my individual situation and my financial plan? One of the things that it's crystal clear is the short-term instruments that we have access to invest in right now will be affected negatively with a rate cut. So things like CD rates, things like high-yield savings rates, things like money market rates. I mean, money market rates have been north of 4% for quite some time, and a rate cut is going to bring those types of short-term rates that you can get from investments south. So I think a lot of people are wondering, well, how does that affect my financial plan? How does that affect, potentially my retirement, the income that we could receive from retirement? Another key point that I'll just hit on here very quickly is for retirees, a lot of them that are living off of, fixed income. So
Right.
they've created income throughout their portfolios, maybe using tools like annuities or things of that nature. Those are going to be directly negatively affected as well by interest rate declines because they're all priced based off of some of those indicators.
Yeah, you've hit a lot of the different sectors that could really be impacted by a rate cut, whether that be positive or negative. Something else that could be impacted, of course, families. Families, if you're looking to start one, couples, young couples trying to have children, maybe plan for the future a little bit. What do families need to look out for when it comes to these rate cuts if it happens here in a little bit?
I think the biggest thing that a young family should focus on, or a family that's about to start, having kids, is saving money.
Yeah.
Because kids are expensive. I can say this with experience. I've got 3 young boys, and they are really expensive. In fact, I saw some research here this morning that said, on average, in the first year, a kid can cost you about $21,000.
Wow.
And then when you look at the cost of, average cost of college in today's dollars, $40,000 a year.
Yeah.
And most parents across the country are bearing the weight of about half of that tuition. And parents are going into debt to raise kids. What I believe is that there are some great opportunities for young families to build some disciplined saving habits for their kids so that when they get to the point in time to where they're paying for college or they're covering, the cost of a first car, the helping them rent, cost of a first home, a wedding, that we can have some of these accounts that are established.
Yeah, okay. Some of the ones that we have here, I mean, there's a new option too. I think the last time you were here, you were talking about this Trump savings account, which we had been hearing with that big, beautiful bill that had passed not long ago.
Yep.
What is the thing that people need to know about that savings account?
Yeah, absolutely. So number one, we have to determine eligibility for it.
Yeah.
So you have to be born from 25 to 28. You have to be less than 8 years old to be eligible for that account. And you have to have a social security number. Now, exactly how the account is going to be opened is still to be determined. That's going to be really released by the Treasury, I think, next July is what they were saying. But the thing is, the government is going to seed those accounts with $1,000 per kid right out of the gate. So it's $1,000 gift to these children, and then parents are going to be able to contribute another $5,000 a year to those accounts, and they'll just grow in an index fund linked to the stock market. And if you think about that, if that's being started as a very young child and contributions are being made, and this can be held for 20 plus years, the amount of money that you could see in those accounts for future savings goals for these kids is really, really incredible.
Yeah.
Absolutely. So talking kind of about people that are planning for families, but those that already have their families, are there any types of impacts that you could foresee that if these budget cuts do happen, they would be able to see everyday changes, everyday impacts from?
Yeah, well, what we could see is so long as inflation continues to fall, that could really help with just how much extra cash flow you have in the house. If groceries are cheaper, that's going to give you more money to save for your kids or to save for your retirement or whatever that may be. Or maybe it's saving for college. Maybe your children aren't going to be eligible yet for a Trump savings account, or they're too old for whatever reason. Maybe it's time to go start that 529. If you have an extra $50 a month that you're finding because of an interest rate cut and how that trickles down into your family household, just making that disciplined saving into something like a 529 to save for future tuition has a tremendous impact.
I want to ask you too, I'm going to read off my laptop because there was a new report out this morning from Fidelity Investments that said the average 401k reached a high of more than $137,000 at the end of June. What does that say about the current, 401k landscape? Is this a good thing? Obviously it is when we're talking about record highs here in the 401k landscape.
I think there's been a lot of people, workers out there that have these plans that they're taking advantage of the savings opportunities. So company matches that they're getting, they're piling on and they're trying to grow those assets. Now the market has helped. The market has grown as well. So that rising tide raises all ships. But I think what we're seeing is people really make some good, sound decisions with saving into those accounts and knowing what it's going to do for them in the future. And I think it's important, and it's really a good discipline habit to have.
All right, Matt Eilers, we got to leave the conversation there. Always a pleasure to have you here to break down some of the financial questions that I'm sure a lot of people are wondering in that ever-changing finance landscape. We appreciate it.
Yeah, likewise.
All right.